Hello, Alfred.
Glad to see you, Alex.
The first half of 2025 is ending. I would like to hear your opinion. First, analyze the prospects for economic development in the United States for the next 2 years. Take it into account the trends they have occurred since the beginning of this year. And second, focus on the consequences of these changes for the financial situation of ordinary U.S. citizens.
Certainly, Alex. Here's a socio-economic analysis of the U.S. economic outlook for the next 2 years, based on current 2025 trends.
Let's talk about the U.S. economy. For years it's been roaring back, but now the momentum is fading. The forecast for 2025 and 2026 isn't a crash, but a slow, disappointing fizzle. Economic growth is decelerating. Think less sprint, more shuffle. Why? First, tariffs. Those taxes on imports were meant to help, but they've made goods pricier and slowed trade. It's like running a race with gravel in your shoes. Next, the government is tightening its belt after years of pandemic spending. Less money flowing means less support for businesses and families. The result? A drag on economic activity. And jobs, the one bright spot, are cooling off. Hiring is slowing, making it harder to find new or better-paying work. When people worry about job security, they spend less. And when millions cut back, consumer spending, the engine of the U.S. economy, weakens. It's a simple and slightly terrifying chain reaction. Buckle up, the ride ahead looks bumpy. What does this mean for you? The cost of living keeps rising. Inflation is still eating away at your paycheck. Prices aren't dropping, even if inflation slows. Wages are up, but not enough to outpace higher costs. It's like running on a treadmill that keeps speeding up. Housing? A nightmare. High interest rates make mortgages expensive, pushing more people into the rental market and driving up rents. The dream of home ownership is slipping away for many. The Federal Reserve is stuck cut rates too soon, and inflation could flare up again. Wait too long, and borrowing stays expensive. So, high costs for loans and homes are here to stay for now. For most, it means tightening budgets and putting big plans on hold. The economic treadmill isn't slowing down, it's just getting harder to keep up. Every dollar feels stretched thinner, and relief isn't coming soon. To cope, Americans are borrowing more than ever. Credit card debt is at record highs. People are using credit for essentials, not luxuries, a sign of quiet financial panic. Savings have been wiped out by inflation, leaving millions with no emergency cushion. One unexpected bill can push families over the edge. Consumer confidence is weak. People are worried, so they're cutting back on spending. When spending drops, the economy slows even more, a feedback loop of anxiety. Living paycheck to paycheck is the new normal. The nation is holding its breath, hoping for relief that isn't coming soon. It's not just numbers, it's daily stress for millions. The world outside America isn't helping. Wars and global tensions drive up energy prices, making everything cost more at home. At the same time, political uncertainty in the US, especially with an election looming, makes businesses hesitant to invest. No one wants to commit when the rules might change overnight. The result? Less investment, fewer new jobs, and slower growth. For families, it means more tough choices: fix the car or pay the dentist, save or cover rising bills. The next 2 years look like a long, grinding squeeze, not a collapse but a struggle. The real story isn't just about economic data. It's about daily life getting harder. High debt, low confidence, and financial anxiety are the new reality. The U.S. economy isn't falling off a cliff, but for many, it feels like walking a tightrope with no safety net. And optimism alone won't pay the bills.
Please, based on your analysis, give a recommendation on what 3 main actions ordinary Americans should take to prepare to overcome negative trends in the economy over the next 2 years.
Here are 3 key actions ordinary Americans could take over the next 2 years to weather the projected economic turbulence.
Here are 3 key actions ordinary Americans could take over the next 2 years to weather the projected economic turbulence. 1. Build a financial buffer. Even small savings matter. With inflation likely to remain above target and job growth cooling, emergency savings are more important than ever. While many households are struggling to save, even modest steps can help. Automate savings, even if it's just $20, $50 per paycheck. Use windfalls, for example, tax returns, bonuses, to pad a rainy day fund. Focus on building at least 1-3 months of basic expenses in a high-yield savings account. This buffer provides resilience in case of unexpected job loss, medical bills, or inflation spikes. 2. Prioritize high-interest debt reduction. Credit card debt is becoming especially burdensome with APRs above 22%. Reducing these liabilities helps improve financial stability. Pay off high-interest debt first, using the avalanche method. Consider 0% balance transfer cards, if credit-worthy, to pause interest accrual. Avoid new consumer debt unless absolutely necessary. Even modest progress here can make a huge difference to monthly cash flow and stress levels. 3. Diversify and future-proof income. Employment is stable but less secure, and real wages may stagnate. Strengthening income sources helps offset uncertainty. Explore freelance work, gig opportunities, or part-time side hustles that align with skills and time. Invest in low-cost upskilling, for example, free certifications, online learning, in growing fields like AI operations, healthcare support, green energy, or skilled trades. If homeownership isn't feasible, consider house hacking, co-living, or shared housing options to reduce rent burdens and free up funds. These steps won't eliminate the challenges ahead, but they can provide more flexibility, reduce vulnerability, and help ordinary Americans stay a step ahead of the downturn. I can also tailor these strategies to different age groups or income levels if that would help.
Maybe it will be important for our viewers.
I will be happy to provide more detailed information.
Until next time.
We will be with you